Let's have a look at the two lessons in the taxes spreadsheet. We'll have a look at lesson one and lesson three. And the first thing to do is to enter all of the default values underneath of the red triangles. And we see 55 and zeros. And then over here, the main two are going to be the 3 and 2% values under state and city tax. Now, these are kind of estimates of what your tax would be like. They do not use the laddering system that the federal income tax uses and that I take care of in this spreadsheet. For example, to understand laddering, let's just change this value to 75,000 and then scroll down here to the tax tables for somebody whose status is single, filing single. And what we see is that their first 11,600, that's taxed at 10%. And then the amount that fits between 11,600 and 47,000, that's taxed at 12,000. And then they're going to be taxed just a little bit more, about 13,000 more dollars are going to be taxed in this rung, the third rung of the ladder at 22%. Adding up each one of those rungs sums up to 8,300 for an income that has a $75,000 income. Note that such an income, when single, we're going to subtract off 14,600 from that for the actual taxable income. Okay, so that was how laddering works, but city and state taxes, I'm not laddering those. Each state and each city is going to have their own ladder, and it could be a really complicated set of tables to work with. Because these percentages are small enough, I think we can get away with not laddering. And again, this is just an estimate of what your taxes will be like, just to give you a frame of reference. So let's say when you graduate, you make $55,000, 3%, 2% on the city tax. We see that if you're single, you're in the second rung of the ladder, and your taxes, all of the taxes that are going to be removed, that's the summation of these four values right here. They sum to 10,800. That's the value here. Keep in mind that FICA is taxed on the full $55,000. You don't get this 14,600 deduction from 55. You're taxed on the full 55 for FICA. Everything else you're taxed on after removing this deduction. Now, the total amount of tax is 10,800. If we take 10,800 divided by 55, we get an effective tax rate of about 20%. Now, let's imagine that this person, so that was lesson one. Let's now have a look at lesson three, where we're going to have a look at investing. Let's imagine that this person decided they wanted to invest strictly in their taxable accounts. So I talk about taxable accounts in chapter 4 and in chapter 14. So let's say they decide to use $7,000 as their investing. So $7,000 subtracted from their after-tax money would leave them with $37,000 to spend on life. Now, instead, let's say they decide, no, let's invest $7,000 into their IRA. So we're going to enter that amount right here. That then gets subtracted from the 55 as well as the 14.6, and they have a taxable income of 33.4, and their effective tax rate drops quite considerably, and they're only taxed about 9,600. But look at the after-tax money. They have $38,000 in after-tax money, and that's the tax advantages of investing in a tax-deferred account like an IRA or a 401k. So I hope that is clear to you now, and I invite you to read the chapters.